from tomorrow, we'll start having the sales numbers for the month gone by from the auto companies. We're also in the thick of earnings season, and auto ancillary company Sona Comstar has come out with its numbers, where we've seen consolidated revenue come in at 652 crores as against 577 crore rupees a year ago. The net profit, meanwhile, at about 93 crores versus 89 crores a year ago. Interestingly, order book of more than 20,000 crores, and most of that is coming in from electric vehicles. So let's find out about the road ahead at Sona Comstar with the group's CEO and Managing Director, Vivek Vikram Singh, who's now joining us live on the channel. Good morning. So we know the headline numbers. You know, you've issued a press release where you're saying this is the highest ever revenue, EBITDA, bottom line. I take all of that. What we'd love to know from you is on ground, what's happening. Sona Comstar recently decided it was going to really focus a lot of its R&D on EVs. Is that still the thinking that's happening? Are you seeing more orders that are also coming in from the automakers?
Yes, so thank you and good morning. Our EV journey started back in 2016. That time it was 1% of our revenue. Now it's about 25. And as the world electrifies more and more and the powertrain becomes more electric, our revenue also would reflect that. We have increased our order books significantly. I think about 3 quarters ago, it was just 14,000 crore. Now it's 20,000 crores. And we are seeing more and more of value addition in the EV transmission for ourselves. I think we today have 23 EV customers from all over the world, which is quite a significant achievement for a company which is largely operating out of India and managing to beat a lot of global transmission players in the auto space in electric vehicles.
Growing at 25% plus, but will that growth get constrained, especially looking at the global car stroke demand scenario? Big auto companies in Europe, they've already raised a red flag. Last year it was about semiconductor. This year it is about demand per se. Could that affect your short to medium term growth target? And will you struggle to maintain 20% plus growth?
So 20% plus should not be an issue, to be honest. That's actually a low threshold, because if you look at our journey in the last 22 years, our CAGR has been 36%. Even last year, we grew 36%. If you look at the last 5 years, it's about 30 plus percent. So 20% shouldn't be an issue. But yeah, of course, anything which is a macro headwind, we are also operating in the industry, it affects us. So yeah, instead of growing by, let's say, 35, 36%, we may grow by 30%, we may grow by 25%. But we will still have much stronger than industry growth. And that actually is coming out of our order book, because we have so many new orders. If you look at underlying industry, for us, that growth has been 0 or negative for the last 3 years. Even then, if 2 years ago we were 1,200 something crores, then we grew to 1,560, then we grew to 2,130. And even if you double our first half, we are looking at 25, 2,600 plus kind of numbers. So yeah, I mean, right now it's not that difficult. Like I said, the first answer was the answer, that because of the electrification trend, as powertrains switch, we are becoming bigger part of that switch. So we are not necessarily seeing that shrinking. Europe's been challenging though for us as well. Europe used to be a very large part of our revenue. It was our second largest market. Now it is our third. It's shrunk to about 14-15% only. So yeah, Europe is challenging for sure. And I'm not sure that will change in the near term. However, US and India are more than making up for it for us.
Sure, Vivek, so point taken that 20% growth is something that seems to be in the bag, though Europe remains a bit of a challenge. But wanted to understand from you, will this revenue growth come in at a better margin profile? You've come back to the 25% mark, but with the PLI scheme, benefits, etc. kicking in, should we expect an upside in the margins from here on?
So I don't want to comment on PLI because, as you know, the scheme outlay is fixed. There has to be a positive impact. How much I can't tell you, because if you take it at the maximum percentage, it could go up to 3-4% additional in the margins. But I don't expect they will be able to pay everyone 100% of what they apply for. it would be prorated. So let's see where that goes. But you're right, 25% is where we've got back to. Going up from here would largely depend on raw material prices and mostly alloyed steel. Now, if all of you are saying is right, and there is a demand slowdown, etc., and automotive especially, alloyed steel with that logic should start coming off. It should start cooling. Hence, we should see a margin expansion. But again, stranger things have happened, so I wouldn't stick my neck out on that.
Tell me, Vivek, given what you just highlighted about Europe, we all know what's happening with China right now. You had talked about a Capex outlay of about 900 to about 1,000 odd crore rupees over the next 3 years. Do you then bring that down?
So, very good question. Our Capex plans are right now just to fulfill the order book we have in hand today. Even with what is happening in China or Europe, if you look at our order book, a lot of it is mostly catering to North American or Indian customers, so not that much correlation. However, the cash flow management of the Capex is something we are keeping a close eye on and trying to hold the tap on. The commitments we have given, so out of the 900 you said, I think we've already committed around 300, and cash-wise we spent about 200. So I think largely on track, because the near-term headwind should not shake what is the vision and what is the actual commitment for 25, 26. And I don't think that will change. In fact, I think the industry should grow because we are at we're historical low light vehicle sales right now.
Okay, Vivek, that's all the time we have for today. Incidentally, the company has also announced that it's going to be shifting its operations from a factory near Pune, which is about 1 acre, to a new facility in Chakan, which is 10 acres. So obviously it's going to be a much, much bigger factory. So here it is on live television asking you to invite us when you do shift operations there. Maybe we can do the next interview on the factory floor.
100%, 100%. I'll invite you guys. We try to figure out the inauguration date, etc., and we will 100% invite you. Thank you so much.
Awesome. Looking forward to that. We are geeks who like to go to factories and show our viewers as well the stuff and the magic that happens on the floor.